you don't want your home, especially if you're going to live in it, to become a matter of stress for you, right? You want to, it's home sweet home, right? It's
Right.
not home hell home, so you want to be
I
able
love
to,
that.
you want to be able to relax when you're home and not worry about whether you can make the mortgage payment or not. But I think a lot of these things, because debt to income ratio is a gross number, right? It's not
Mhm.
a net number. People are having this common misconception that, hey, I can actually afford more than I can actually, bring in.
All righty. Something happened yesterday that I thought might take some more time, and that is mortgage rates for owner occ are now below 7%. We're going to be talking with several mortgage brokers and see if anything is popping off. But before we do that, I want to give a special shout out, recognition, applause to Convoy Home Loans. They did something this year that was even better than last year. Let's have Jonathan give us a little tidbit on what happened for Convoy Home Loans in the last couple of weeks.
Thanks, Mike. So big jump up in terms of our actual national ranking for mortgage brokers. There's something called the Scotsman Guide. It's different than when every realtor says that they're the top 1% realtor, because this is actually, based on facts per percentages, and data on the market. So we actually ranked the second largest non-conventional broker in the nation for the Scotsman Guide. Yeah, yeah. And
In
then
the
we're
we're
also
not talking
in the nation.
city or
Yeah.
state,
Yep.
nation.
We're talking about the nation, right? And a lot of
Wow.
yeah, we see a lot of people try to flex their little circle that they're in of like, oh, number one in San Fernando Valley or wherever, but we're like, no, 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 we're the nation. That's how we're able to get
Gotcha.
the products we have. And then
Right.
we're also number three just overall, like overall top mortgage broker in the nation,
Gosh, that's amazing.
conventional plus non-conventional. Yeah. So number two in the nation, the only guy ahead of us has been in the market for like 40 years. He's been doing it for a long time. We've only been doing it for 3.5 as Convoy. And I think that hopefully in the next, 2, 3 years, we're going to be able to pass through him.
There you go. Well,
Yeah.
and again, as I recall, you were number six last year. So from six to
Yep.
two is quite the jump.
Yep.
And you've got a playlist on this channel that goes back years. And if people go back and listen, the reason you're number two is you keep innovating. You don't just
Mhm.
rest on your laurels. You've created stuff, been a first mover, passed on savings. It's been fun to watch as an outsider. So thank you for coming back each and every week. But now let's talk about rates. I I believe consumers are predictable. I fear that going sub seven is going to unlock a meaningful amount of marginal demand. Probably not yet, but you can tell me because it's only been 24 hours. I suspect, though, over the next 2 to 4 weeks, the demand might be unlocked, assuming we stay below seven. And we actually might see inventory roll over. But you're in the business, you're getting phone calls. Did did any phone calls pop off when rates went sub seven or not yet?
Yeah, I think, I mean, we've honestly been sub seven for the last week, like last week and a half. So we've kind of already kind of been in the range of that, but
Okay.
obviously we're getting a lot more calls for purchases on deals that were a little borderline previously. So I
Mhm.
think that just opened up the buy box a little bit for a lot of people. But I'm
That's
trying,
exactly marginal demand.
yeah,
That's what it is.
yeah.
It's no good at 7.5, but it's okay. So yesterday, shout out Lance Lambert, Resi Club. He posted 699. I think that's for mortgage bankers, but that's no
Yeah,
points.
yeah,
Would it be unreasonable to get 6.5 today? Good credit, good down, maybe a point or two. Is 6.5
yeah.
possible?
Yeah, absolutely. I mean, I priced one out yesterday at 6-1 with like a point and a half, because
Shut up.
their par was 6-8. Yeah. Yeah.
6-1?
Yeah. It's
Uh,
there.
I'm
It's
nervous.
there.
Now
So
I'm nervous. I'm nervous. All right.
it's the market is there. And again, but this isn't crazy, right? Because like we were talking about, we are bouncing around in this range,
Yeah.
this little rectangle, right?
Yep.
It's not like we're shooting down below that. We're not shooting above it. We're literally in this little rectangle. And that rectangle is dictating everyone's emotional financial decisions, right? And I say emotional financial decisions
Oh,
because
I
people are
agree.
making financial decisions emotionally versus logically right now because
I
they see
agree.
it drop a little bit from that rectangle and they're like, oh my gosh, now is the time. They rush in, and then they see it come up again. They're like, oh no, now's not the time. Pull out.
Hmm.
So
Yeah.
that's been the biggest fault, and I'm sure I've lost a few clients by just telling them, hey, it's probably not the best decision to
Right.
buy this right now because you guys are so tight on your
Yeah.
finances.
It's, I love the fact that you do that because again, you have to sleep at night, right? Putting somebody in a home loan that they're ultimately likely to lose is it's not a
Hmm.
win, dude. It's not a win.
Yeah,
It's
yeah.
not a win.
It's you don't want your home, especially if you're gonna live in it, to become a matter of stress for you, right? You want to, it's home sweet home, right? It's
Right.
not home hell home, so you want to be
I
able
love
to
that.
relax when you're home and not worry about whether you can make the mortgage payment or not. But I think a lot of these things, because debt to income ratio is a gross number, right? It's not
Hmm.
a net number. People are having this common misconception that, hey, I can actually afford more than I can actually, bring in terms of monthly income. So that's been the biggest concern, I think, for you, for us, where people are starting to overbid again. And I think that's the number one thing that we want to be wary of and kind of remind clients like, hey, it's not the time to make an emotional financial decision
Agreed.
that you're going to regret later.
I totally agree. Um, let's go on to seconds. We talked about Freddie Mac, kind of bringing seconds to bear. I don't know where that is. I think there was a 30-day kind of wait and see period, but it does sound like seconds were always around. I think that's important. I think Freddie Mac kind of throwing down the gauntlet has caused other lenders to start cutting rates because they were going to be underbid by Freddie Mac. So I'm
Mhm.
curious, where are seconds? ORaaT seconds. Let's do ORaaT
Yeah.
seconds.
Owner Ox Seconds, we actually recently got a new investor on board, and they are doing it at 8 to 9% on a 30-year fixed.
So wait a second.
Um,
I just want to make sure I got that. So we're not talking
yeah,
5, 7 year balloons. We're talking 30-year fixed, 30-year AM.
30-year AM, 8 to 9%
And
on a
again,
primary.
the reason this is important is there's a lot of people that got twos and threes on the first, where it makes no financial sense to get, that's the asset.
Hmm.
But if you needed 50 grand or some number, just go get that at 8 or 9 instead of recasting this whole loan, which is
Yeah.
just a horrible idea.
It's also better than kind of floating around on a HELOC too at times, depending on your scenario, right?
Right.
And this qualification, obviously on a primary, can also go towards like bank statement income, profit and loss income, not just tax return income. So it kind of has a wider range, but I think that rates being in that range makes money a lot cheaper and more viable for people, especially people that were waiting for seconds to drop below the 10-11% range on their primaries. This kind of gives them access to that money. And I think the power of this is you tap into, and we kind of talked about it last week, you tap into an equity that you had that was sitting there to be able to deploy on something else. Now, instead of having to deploy it and try to make 10 to 11 to 12% on something, you can now cut that return and be like, okay, I only my to break even, I only need to make like 8 to 9% on the
Right.
return, and anything above that is extra profit.
Yeah, makes total
Yeah.
sense. Makes total sense. Lastly, we've seen for a long time that DSCR loans are kind of at the same rate as conventional. Is that still true, or did this drop down kind of separate that?
Yeah. So a lot of our investors, especially the ones that are more Wall Street based on the fund side, they've dropped with conventional this time
Oh
around
wow.
because the yields have dropped, the 5-year treasuries dropped. So a lot of them now, we're actually pricing same thing as conventional with 25% down. I put one in yesterday with 25% down and just 100% debt coverage, like a one debt coverage ratio. It was a 7.25 par. So yeah,
Wow.
and you could buy it down to 6.8, 6.7, all the way down to the floor, back again at 6.5, because we were out of there for a little bit, but now we're back there.
Hmm.
So yeah, I mean the market is unpredictable as we know, but this is more for people to understand that hey, this is not the time to make emotional financial decisions, but it's a good opportunity to lock things in if you want to. but
Mhm.
we're still in that rectangle. We're not like,
Yeah.
I don't see it like, going down all the way back to, wherever we were before COVID. But if you like it, lock it,
Mhm.
finish it up, move on, and then cost average down as rates kind of, come down later.
Yeah, it's funny. It seems all the rates are moving lower. Again, complete outsider, not in the business, certainly not number two producer like you guys are. Is this just a sign that Wall Street and smart money know for certain the Fed's not going higher, so they're just collapsing spreads? Is that what's going on?
Yeah, I think so. Because the wax weighted average coupons on Wall
Mhm.
Street that they wanted, um, back month and a half, 2 months ago, it was like 8% to 7.75 is kind of the weighted average coupon package that they wanted to buy.
Mhm.
But now that's dropped to like 7.5. So
Yeah, so
that's
this
actually a
okay.
pretty, yeah. So now the weighted average coupons, obviously packages that are sold above that are trading at a premium. Packages
Sure.
sold that range of 7.25, 7 are where basically the par is now.
Got it.
So people are kind of trading in that range. And Wall Street, I think we knew this from the beginning of the year. They're not going to increase rates this year, but
Mm.
they're probably going to keep it the same.
Right.
And I think that's now it's settled in and they're comfortable with that idea. So they've brought their weighted average coupon requirement down.
That's
So that's what's moving
exactly
the rest of the market.
I think that's what's happening because the Fed hasn't moved, but rates are coming in. I think it's just the lending institution, money moving around
Mhm.
is wanting it needs less margin because there was always a risk before that they might have one more hike. So they're kind
Mhm.
of removed that from the equation. So pretty
Exactly.
crazy.
Exactly.
So we've got seconds in the eights and the nines. We've got firsts as low as 6-1, which just frankly scares me. We got DSCR and conventional alike, and we've got Convoy Home Loans, the top two producer in the country. If somebody wanted to get a part of that, how do they reach out?
Go to convoyhomeloans.com and let us know you came from ORaaT.
There you go, folks. You got to tell me you came from ORaaT so you get Jonathan or his partner Dustin, or you just get sent in a queue and you don't want to be in the queue. Later, guys.